And so this process can continue until year 2122, where after all of these transactions, what effectively happens is Z, who lives in year 2122, gave $1,000 to A and made this research possible.
Need for better communication channels in Web3. So let's look at Dave here, who has expressed the need for specific tools really geared towards communication and collaboration. And then we also have Elliot on the right-hand side here, who feels that new Web3 projects are doing a terrible job in terms of the way that they communicate and market with potential users. Awesome. So what is the problem? Well, this lack of communication infrastructure in Web3 has created these pain points for three core stakeholders, right? So we have our end users, DAOs, and then also dApps, and then also internal teams who are simply unable to communicate and collaborate all together in a decentralized environment, meaning that their data and their personal information is unfortunately not only shared, but also at risk. So we've been hearing from a lot of the talks yesterday and today. The Web3 community values transparency, they value privacy, security. However, there isn't a communications channel at this stage that really aligns and matches well with these values. So I'm Josh, and today I'm joined by my co-founders, Amrit, Paul, and Jake. We are all Canadian students, and we are thrilled to be introducing to you guys Immerse.
Yeah, thank you, Josh. So Immerse has set out to simplify human interaction over Web3. The mission is to provide a set of simple, decentralized services that bridge the communication gaps over Web3. To weigh our market size, we can look at the current number of crypto wallets being connected to decentralized applications. As of this April, there were over 195 million unique crypto wallet addresses over just the Ethereum network, with over 2.4 million crypto wallets generally being connected to decentralized applications every single day. So, to maximize our impact on this Web3 community and to gain traction, Immerse focuses on selling a cross-chain chat API to Web3 businesses. What this does is that it allows Immerse to leverage existing users of these Web3 applications. The users may also utilize Immerse's core dashboard, where they're able to view all their previous messages and send new ones with cross-chain capabilities, using technologies such as BigchainDB and IPFS. Users, they can simply connect their wallet and send a message to anybody on any blockchain. Once this is established, Immerse will expand functionalities for Web3 communities and DAOs by incorporating public or gated decentralized workspaces.
Thanks, Amrit, for the product demo. So we look at our early adopters and think of this in three different categories. First category being the end user, super active users of dApps, Web3 enthusiasts who are asking for better communication channels, in particular wallet-to-wallet communication channels. Our second category are dApps and businesses that want to communicate with users in a decentralized wallet-to-wallet channel. So I actually spoke to somebody here from Binance yesterday who said that they currently do all of their customer support over email. And I think that's crazy because when you look into the future of Web3 in the next 5 to 10 years, these businesses probably don't want to be asking users for personal information like email or phone numbers. So we see Immerse as a better alternative to that. And then finally, DAOs that require a lot of internal coordination. So when we look at the competitive landscape, we recognize that we are not the only solution for decentralized messaging. However, we look at the competition and see them divided into two sort of different focuses. One, some businesses just focus on the end user and that peer-to-peer, wallet-to-wallet communication use case. Others focus on the business side and just provide single direction communication from the business to the user. None of them do a great job of providing a fully immersive experience into Web3. Thank you.
I can start with one, and then I'm sure the other judges have questions as well. Very interesting concept. How are you looking at your go-to-market strategy at the moment, and how to scale the business when competing with Discord and all these channels that are not Web3 native, but that have gained quite a lot of traction, as you know?
Yeah. So the way we're approaching the market is, right now, yes, there are a lot of solutions out there that do bridge the communication gaps, such as Discord, as you mentioned. But right now, the way we're going to do this is, first, we're going for the businesses, Web3 businesses, because we don't want to say to these users, hey, because right now the standard is all the messaging APIs are secure, they need to be private, and the security of the user is at most priority for everything. And those users are getting that already. So we don't want to go to the user straight and tell them, hey, use this decentralized approach, our API is perfect, and you can message your peers on our solution. But the way we're doing this is by approaching businesses which actually provide a use case for these users. And since they are using these businesses, then the users are indirectly interacting with us through these Web3 applications.
So, what exactly does this product, from an end user perspective, why does this materially improve my experience communicating within dApps? Is it because I'm now verified with my wallet, or am I getting an aggregation of conversations? Is it better UX?
You're asking just to hone in on the value prop a little more?
Yeah.
Yeah, so we're talking about this chat API that we want to provide to dApps. So for example, any dApp that wants to do customer support, we want to allow them to communicate with users just via their wallet address. So from the business side, they're able to send communication to users just on their wallet address. And then from the user side, they'd be able to see all of these messages from all of the businesses that they've interacted with, all in one place, as well as any of the communication that they're doing with the DAOs that they're part of, as well as all of the other communication that they're doing peer-to-peer. So just other single DMs, wallet to wallet.
How is this more secure than your competitors or all the other options on the market?
Right. So this is more secure. I mean, security is the standard, and we're not really saying we are more secure because the other solutions aren't just as secure. But what we're doing is we're approaching a market from a different standpoint, not competing against, hey, we're more secure than you are. We're not saying that, because security is standard into this market. But in terms of security, we can say that we are decentralized. So that goes on par with all the other decentralized applications, but it's more on the use case that we're targeting that sets us apart from the competition.
Did you say you are decentralized or you're not?
We are.
You are decentralized. How?
Yeah, so currently the plan is to be decentralized by, currently technologies we're using are like BigchainDB and IPFS to store data decentrally. But our servers, we also want to store, are run decentrally, but we are looking into the solutions that we could utilize for this, and the technologies, we've been looking into technologies for quite a while that we could move forward with. Thank you.
Yeah.
Our next participants, Cell Protocol.
Hey guys, it's really our honor to be here. We are a Cell Protocol team. We are building so basically we are building a liquidity layer. We have three value propositions. First of all, we want to democratize liquidity provision on order book DEX specifically. And the second proposition is to capture high intrinsic yield from price fluctuation, which is volatility, not from yield farming. And third value proposition is ultimately we want to become like the liquidity layer, the unified liquidity layer across multi-chain clubs. We have a team of 10. My name is Felix, and Claire with me leading our marketing efforts. Chi is 0x57. He used to be a tech lead at Coinbase, graduated from Stanford, and Hippo, who did Morgan Stanley tech, and also serial entrepreneur. And myself, also in the space for a while. And we actually generated this idea back in August last year, and we gradually built out our product. And we actually launched on Solana mainnet last month, and there are already 100 bots are running right now on our mainnet.
Right. So the reason why we came together to build Cell is because, first of all, we are all audible DEX maxis. So audible DEX, central limit audible DEX, here we call them audible DEX, is superior to AMM because it is more flexible, it allows more flexible trading in terms of derivatives and making long-short bets. However, right now, liquidity is the problem because, first of all, providing liquidity to an order book is more of a skilled activity, and this is traditionally done by professional market makers. And another problem is, like, crypto projects, especially long-tail assets, find it hard to bootstrap their liquidity on audible DEX. So we are building Cell to solve that problem, and our solution is to build a liquidity layer, and essentially we are building a platform for grid trading bots as a simplified LP tool. So to set up a basic grid bot, you define a price range and the density of the grid within that range. And then the bot is gonna constantly buy low and sell high when the market price hit each grid level. So you make a small profit from each pair of trading. And this is a sustainable yield strategy because you're making profits from market volatility instead of on AMMs. You rely on high transaction fees and like inflationary tokens. And in fact, Grid provides like at least 30% of the trading volume on a lot of CEX, but on DeFi it's still blank space. So we are bringing Grid trading to DeFi users. And also for the clubs, actually we are providing long-term passive liquidity because Grid itself comes with great like user stickiness, and this is complementary to the just-in-time active liquidity provided by professional market makers. And you can see here our products. We support both spot and future. And for beginners, we have preset bots where users can just select a token and deposit their asset. And also, we have a social trading function where you can easily copy trade one of our community bots. And also, like for advanced users, we allow for customize and create your own bot. Right now, we are on Solana, but like in the future, we'll be cross-chain and cross-DEX. Because ultimately we want to be a unified liquidity layer. We believe that in a healthy ecosystem, we need like big players, but also retail users like you and me here, and Cell is exactly built for us. Thank you.
Thanks, guys. So what exactly is the smart strategy that you're employing? Is it deploying capital into a certain fixed range? Is that correct?
Yes, so similar, like you define the range you want to provide liquidity, and then also like how many limit orders you want to put in between. So for example here, for this strategy right here, it has like 100 grids between like $30 and $90 Solana price, SOL price. So that's how, it's keep trading, buy low and sell high for each pair of trading makes like small profit.
What's the grid? What is a grid?
Like the grid is, so basically, like for example, let's go here. Right, so for example, like on the way down, it keeps buying, and on the way up, every time it buys, it tries to sell at a small profit. So for example, if you buy at 100, you try to sell it at 101, and then you make 1% of profit. So the more price swings and the more volatility, you can generate more yield from the volatility.
Have you back-tested this against Uni V3 and concentrated liquidity? What the LP fees would be relative?
Much higher than Uniswap V3, because like Uniswap V3, essentially you are making you're earning the market making fees from the traders. But not only we make market making fees, we also try to buy low and sell high. With every grid we make a profit. So it's like double layer of profitability from the volatility.
So based on the history data on our platform, basically the APY grid yield is around 50 to 60%.
So one of the main hurdles we've seen with Uni V3, right? It could be a better product, but the actual process of providing liquidity and using the platform has been a big hurdle for them for actually gaining traction and pulling in capital. So have you guys thought about, maybe your own strategy could be better, but it's tough from a passive LP perspective?
Sure. We actually had several iterations on our UX. At first, we only have this create bot tab, and as you can see, if you want to create your own bot, there are many parameters you need to set, right? So, based on beta user testing, a lot of people are kind of afraid of this complex system. So after that, the second iteration, we have Autopia, which is like the current running bots by the users. Currently, we have let's see here. We have 104 bots being built. So the simple way is to really just copy, trade, deposit into someone else's strategy. And if you want to see more details, you can actually click into it. And then you can see, a lot of the orders that being complete. And then you can just simply copy the same strategy with same parameters. So that can simplify the user experience.
Awesome. Question from Lydia. I'd love to hear more about the AMM versus the LOB dynamic. How is the market moving? What are the trade-offs between the two?
Sure. We are cloud maxis for several reasons. First of all, we think that blockchain become faster and faster, especially with layer 2s and zero knowledge rollups. And just for AMM, it is elegant. It's all driven by math, but it's still rigid. You are basically providing liquidity and trade based on a curve, like fixed curve. For clouds, it's much flexible, and then you can express your view, more thoroughly. So that's our view, on cloud versus AMM. I think both will coexist. It's just 10% of the volume from order book right now seems too low on DEXs. We think at least 50-50.
Next team is DataGen.
Okay. Hi everyone. We are BitDataGray co-founders. BitDataGray is a blockchain startup based in Dublin, Ireland. We are working on DataGen project. It's a new blockchain infrastructure for decentralized GPU and CPU cloud computing, no cloud storage. The cloud computing market, it's really booming in the next few years, but the actual market, it's mostly centralized. It's managed by big server farms owned by AWS, Google, Azure, and so there is no privacy or transparency at all. So we think that if we really want to boost the Web3 revolution, we need to go to the backbones of the web, so touching the cloud computing and the search engines market. And our solution is DataGen ecosystem. It's a new decentralized and flexible network that provides cloud computing in-chain for any kind of application. In the early phase of the project, we target specifically privacy-friendly search engines and browsers, while in the mature phase, we target a wider range of applications, so any kind of Web3, like gaming, metaverse, VR rendering, so they can permissionless access the network, use the service. It's completely open source, community owned, and community improvable. Technically speaking, we are going to create a substrate-based blockchain with an asynchronous randomized consensus protocol. Basically, our validators are local validators, so they are very, very close to the user, geographically speaking. In this way, we can keep very low the latency time and also have a more decentralized network compared to a proof-of-stake network. But we also have a proof-of-stake component. In fact, our validators, to do validating activity, they have also to stake some Nati coins, our datagen token, but instead of being reviewed by the entire network, so double-checked by the entire network, they are randomically picked by an algorithm to be double-checked by other validators. So basically, few validators double-check other validators. In this way, we are hundreds of times more efficient than totally proof of work. And so at the end, we need to be very, very fast. Otherwise, we aren't able to provide cloud computing in-chain for search engines and gaming. So at the moment, the team, it's 8 people, me and Luca, the co-founders and managers, and we have our technical developers working with us. Yeah, it's a fluid moment for us, so we have to grow the team as soon as also we grow the resources. So where we are now, we already had the TGA of the token, our utility token, in March. And at the moment it's a Web20 on Binance Smart Chain, but we already put in place inside the tokenomics that we create a bridge to our native blockchain. And we are still in private sales, so the listing on exchanges is planned for the end of summer. But in the meantime, we are also starting the development of the architecture, and we are closing a technical partnership with an important stack, but I can't disclose the name of the stack already because it's not already official. And in 1 year from now, we can have the beta, a pilot. In 2 years, we have the full functional early infrastructure, so the one that targets specifically search engines. And in another 1 or 2 years, to be cautious, we have the mature one in the market. So the next slide is the tokenomics. I skip it because I don't have enough time, I think. So it's 9 smart contracts, all audited by Certic. I go ahead. So the vision, it's very clear for us. So create a blockchain infrastructure that can provide cloud computing in-chain for any kind of applications. And the real challenge here is to find the right balance between decentralization, cybersecurity, but also efficiency, low latency time, and yeah, this is it. Thank you.
I'll ask a quick question on the tokenomics since we didn't have time. Can you maybe talk a little bit briefly what types of token models you looked at and why did you end up in this specific token model and how does the value capture work?
Yeah, so basically the token, as Angela said, it's used to reward the validators. And the validators also need to stake a certain amount of them in order to be double-checked as a price if they are cheaters, basically. Half of the supply, as you can see here, is locked for 24 months, and then there is a release rate, an halving period, etc., etc. The release rate is very long, like 216 years in total. And the reason to do that is basically we want to put a certain part of the cost not on the shoulders of the users and application providers, but on the shoulders of the increasing supply, and we can make the token more or less inflationary. In fact, we already created a smart contract that basically can send some tokens to that address and so burn them if basically the price is sluggish and the user adoption is already good. If instead, on the contrary, the price is good and the user adoption is sluggish, we can make all inflationary, basically. Thank you.
What kind of compute resources will be available through this network?
What kind of?
Compute resources.
GPU and CPU, not cloud storage.
And so those will be run by validators?
Yeah, basically it works in this way. There will be 2 components, a layer 1 and a layer 2. In the layer 1, validators are paired on a one-to-one basis with specific users on latency time, because basically when a user connects to the network, it sends a package of data to the whole network. The first validator that answers the correct way is paired to him. So these validators are not checked inside this blockchain component, but in a layer 2 that we want to host in an existing stack, that every few blocks of the fast blockchain checks the validators, not all of them, just some of them. It's a randomized double check, because if you check all of them, it's not computationally efficient, basically.
So you're checking the output of the computation at the
randomly.
And what is, like, why are you doing that?
Yeah, because otherwise the validators could send false inputs, scam the network, because it's the,
Yeah, and take their words, so they have to double check.
and because they are paired one-to-one to the user for efficiency purpose.
So cloud computing right now is obviously very centralized, but at the risk of being sacrificed from everyone here, it's also really efficient to do it in a centralized way. So I guess the question is, like, if you guys are doing it in a decentralized way, like what type of trade-offs are you looking at compared to traditional cloud computing?
Yeah, so basically, let's say that we don't want to use proof of stake because it's very, very efficient, but not decentralized enough. Of course, you need to have some trade-off. The best decentralized solution would be proof of work, but it's impossible from an efficiency point of view. So we think that the trade-off could be a certain degree of decentralization, but not, let's say, the ethos of decentralized.
So are there concerns about latency and efficiency? You're essentially running every computation twice, and are they running it in parallel, or are they running it like sequentially?
Yeah, the double checks doesn't happen every time. So every few blocks they are double checked. So this lower blockchain, which is a layer 2, it's acting as an authority to the fastest blockchain as layer 1, where the actual computing is happening. So let's say every 10 blocks it's happening the double check.
I see. So you're assuming that all computation is...
No, not all. It's not all checked, basically. Okay. Thank you. Sorry.
We're done with 3, 4 more to go. Next one is Satya coming from ground floor. Before you start, quick question for the judges. You are comfortable, you are filling out the forms as we are proceeding. And for the audience, there is going to be an audience prize. And I will share a QR code towards the end of the presentation. You can scan it and vote for your favorite team towards the end. Satya. Your time starts now.
We are ground floor, social Web3 onboarding in the metaverse. How do you learn about crypto today? Blogs, videos, lectures, articles, you name it. It's 2022, and this is not fun or interactive. So the problem, there's over 100 million people that have bought crypto on centralized exchanges, but only a fraction have ever used a DEX or bought an NFT. All this hype is from the 3% of people. I want to focus on the 96% that have not engaged in crypto at all. So teach crypto to the masses. How do we do that? 3 learning game. Once you finish this game, you'll get a completion NFT. Then you'll join a NFT-gated or token-gated metaverse space, where you'll connect your wallet and you'll be verified what NFT you have or how many tokens you have, and get to talk about the future of crypto. So I'm gonna show you a demo of what is a DEX. Welcome to ground floor. We're going to learn about the basics of what is a DEX. Module 1. How do you zoom out? How do you zoom out? Let's take a look at what happens when governments decide to censor or shut down a centralized exchange. As you can see, it goes offline. Let's take a look at what happens when governments try to censor a DEX. As you can see, it stays online. So which one is decentralized? Nice. Which one is a DEX? Congratulations. We see a role of teachers and students, just like Uber drivers and passengers. Millions of teachers and billions of students. Reputation and incentives for students to get so excited about crypto that they can't stop talking about it. With NFT-gated and token-gated news floors, students will talk about the news. And with the trading floor, students will share trading strategies. How do we make money? Users come and learn about crypto and find their community. Protocols will pay for active contributors, teachers, developers, and students. So the team. I'm Web3 at GatherTown, been a part of the MIT Bitcoin Club for 5 years, and content for a couple. Anonymous Tech Lead has built many GatherTown spaces for top protocols, Solana, Nervos, UIDX, degree in game design, and we're excited. Imagine a world where everyone controls their private keys and operates from their wallet. Thanks.
I think you're tackling a big issue and a big market. My question is, there are some really well-capitalized competitors. Take Rabbit Hole, they raised a Series A recently, and you know all of that. You've mentioned that, but Layer 3, several others. So the question is, how will you win this market over these other competitors that have had a head start, although with different types of models around this idea?
Great question. So the space is 100 million people, and by 2025 will be 1 billion people, right? And that's why we're all here today. And I think all those platforms you mentioned don't bring together one important piece: togetherness, right? I want to learn about crypto with other people, and I think that's what they're missing. Rabbit Hole, all the others, not engaging. And they also have captcha problems. They're overtaken by bots. So with in-game captcha, I think we have a lot of solutions there as well.
Yeah, the vision obviously resonates with everyone here. We've all gone down the rabbit hole in different ways, and have also tried to onboard people in, right? So an easy way to teach them is, one of the most important things for getting new crypto users to understand why crypto is actually good technology. Really, the question then is around actual user adoption. So how are you guys going to get people actually excited about this? If you get the flywheel going and people are excited, then you get organic growth, but getting that ball moving could be tough. So just what are your strategies around kind of growing the project and getting that initial cohort of users?
Yep. So the quests, you'll be incentivized, maybe. That's just the start of it, right? I think the actual thing, the big thing, is the multiple protocols, like I said. So my colleagues won a couple grants from UIDX. And then just being at GatherTown, I'm sure many of you have used it here. There's so many people that will never touch crypto, have never played a game, but that have used GatherTown for their events, for remote work, and it's crazy. I've seen 80-year-old people use the platform. So those are the people we want to onboard into crypto.
Dude, I love your energy, and don't ever lose that. It's that's special.
That's what we need, right? To onboard that good people.
I'm curious to get your thoughts on why you think the users of this platform will be valuable to other communities and DAOs.
Great question. So I think we all start off as students, right? And then we get, maybe we make a little money in the space. We get so excited. I'm sure all of your friends have maybe bought some Bitcoin, bought some Ethereum, it's gone up. They start diving into it, right? And then I think people can graduate and become teachers. I think everybody in this room can become a teacher, right? And then everybody in this room, maybe writing your first lines of code, you can start contributing for a protocol, right? And not only just contributing, maybe hosting events. So there's so many ways that people can contribute, not just, building dApps, building this, just simple as hey, I'm excited about this, I want to host an event. Can I do that?
Yeah, and I would push you down that curation route, because that's incredibly valuable for DAOs and communities to be able to tap into a network that they can trust, that, okay, these contributors or these users have gone through X, Y, and Z certificates and understand certain skill sets. So.
Next, we have hashtag.
How are we doing, MIT Bitcoin Expo 2022? Excellent, I'm Steve Derzinski. I'm here to tell you about encrypted cross-chain messaging platform built on Web3 wallets. So all of you have wallets, all of you have put tokens in your wallets or NFTs in your wallets, and that to me represents a commitment to a community. Why do you have to go through all of the stuff that our wonderful guys told us about, like Discord and everything else, to figure out how to connect to it? We go and capture on-chain data and connect you directly to those communities. So how it works, you connect your wallet, thank you. I didn't pay him either. You connect your wallet to the app, and it scans your wallet, and it says, okay, here's all the communities that you should join that are existing. That's feature one. Feature two is, if you are part of a multi-sig, it creates a chat window just for the multi-sig. I don't know how many of you are in a multi-sig, but it's basically like the board of directors for crypto projects. How do you convince the people on the multi-sig to sign stuff and do things? We create a chat window for you. It's end-to-end encrypted. You can ping them and say, hey, I've got a transaction going on. How are we going to do this? Feature number three is, now I've got a Gnosis safe, I've got a multi-sig, I'm running a bunch of tokens. I want to communicate officially to my token holders. How do I do that? We are integrating HashChat into Gnosis Safe to be an app, so when you start a transaction or you start a message and you want it signed by the safe holders, the multi-sig, you start a message and you send it out, and then you set the transaction going, and you tell people this is an official message from the token minting community to the token minters. So for those of you who are portfolio managers or investors, you can think about this as crypto investor relations, sort of made with all the wonderful tools of cryptography that we have in the Web3 world. I've been dying to build this for the past 2 years. I'm so excited that I'm finally able to build this. I've got a great team of people. They're all remote. They're all probably watching online. Hi, guys. I'm Steve. I'm the founder. I'm also Uncle Iro sometimes. Let's have some tea and also breathe fire. I've got a degree, undergraduate in engineering from MIT and an MBA from Sloan. Cody's our head protocol guy, and Max and Lindsay are also on the team. And then Oren is actually in Melbourne, Australia, but he's a Gnosis guy, so he helps us out with that side of things. And hopefully some of you know Corbin. He's a Boston guy. Shout out to Corbin. Okay, we've won a bunch of hackathon awards. The latest one was the LF Grow Hackathon, which was the Lens protocol, which is the social media platform, so we're excited about that. What are the market sizes? The reason why I put this slide up is, one, to say it's huge, but the other one is to say, you know, we've already got Discord and WhatsApp. Why would I invest in Telegram? I think there's a huge capacity for a lot more messaging solving very specific problems. So I wanted to head that off before one of you guys asked the question. Our roadmap is this. We want to start with the 2 million plus wallets on Ethereum, and then move on to Solana, and then move on to Bitcoin and other wallets. Because we want to make this truly cross-chain and truly, broad communication. Wouldn't it be fantastic if I could take my Ethereum wallet and send a message to a Solana wallet about some NFT sale or something that's going on? This is our rest of our logos. I mentioned some of the schools. And then finally, please come say hi. Please sign up for our beta, hashchat.xyz. We're actually going to go live next week. And we're looking for DAO community leaders and community managers who are having challenges communicating with their DAOs. So, do I still have more time? I'm good. I'm done. Given all the stuff going on with Twitter, we would like to actually invite Elon and Jack to be signers on HashChat's multisig. So please tweet that out to those guys and let them know that we're open to their opportunity, their knowledge, bringing them into the Web3 world. So now I'll ask for questions.
Good job, love the energy. So with your whole socialized platform, I have a very important question as a millennial, and it is, can I like a transaction? Can I like a transaction?
Can you like transaction?
Yeah, I mean.
Hell
like
yeah.
Perfect, that is like an essential
I believe we have a whole bunch of those emoji things.
Okay, good. I do need the full suite. All right, and then in terms of cross-chain wallet
Yes.
messaging, can you please break that down for me?
Sure you don't want to ask me about the spam, how to prevent spam, or you want to know the tech stack?
Yeah,
Tech stack. Okay, tech stack is Web3 wallets to an encryption engine. We're using LIP protocol right now. And that actually creates a symmetric key between all the wallets. So we have an access control condition that will create, because your wallet is a signing wallet, so we need to create an encryption key. So we create that and encrypt all the messages end to end. That's actually written to through Ceramic, to IPFS, and that's pretty much it. So there's not a lot of on-chain, there's zero on-chain data, so there's no gas cost.
Okay, nice. So it is very...
And was someone going to ask me about spam prevention? Go ahead.
Well, that's one, and then maybe, are you going to be launching a token, and how would that work?
That is a great question. That was a good question, and that is a great question. They're both great questions. So one of the challenges whenever you have wall-to-wall messaging is what everybody wants to do is, I want to know whether or not this person, this customer, can afford my product. So of course, the value of being able to send a message, if I could send a message to your wallet right now in your back pocket, that would be fantastic because I would know exactly how much is in there. So therefore, the availability of spam is very high. So what we're going to do is, people are going to stake their messages, say like around $10 of tokens, and send it out. And then the end user, because we're doing end-to-end encryption, it's very difficult to do inline spam reduction. So the end user is going to say, this is spam, and I'm going to slash your stake, and they take 50% of it, and then 50% of it gets burned into the token. So in a way, we have some anti-fragility built into the tokenomics, where there's more spam and then there should be more slashing, and that should increase value in the tokens. I didn't show you tokenomics, not in 4 minutes.
Yeah, well, how are you gonna like monetize this? How are you gonna be profitable with this?
Profitable? Profitable? You mean crypto economics, right? Yeah, it's all token based. It's a token economy. So.
Cool. I'll look that up later.
I don't have any questions, but I'd love to chat afterwards.
More questions?
How do I build a bot?
How do you what?
Like, how do you prevent like building bots to spam people, or like how do you authenticate who's like a legitimate user, who's like a robot on here?
So you see this person I have here, Lindsay, machine learning. So she's actually attacking the machine learning on tracking end-to-end encryption spam reduction, but then also tracking the source of, that's part of the source of the message. So we can tell if it's coming from an EOA wallet or if it's coming from a script. So that's part of the input feature
Users would
selection.
have ratings, and then like, because one of the problems on Discord is all the spam and all the bots. So your users would have ratings, and if they get negatively rated for all their spam traffic, then they're automatically blocked.
Something like that, yes.
Okay.
That sounds like a great idea.
All right, no more questions, I guess.
Thank you, guys.
DeFi, yeah. You want to go full screen? Yeah, full screen. Hello? Hi. At Optify, we're building a decentralized asset management infrastructure to onboard the next wave of users to DeFi, making smart portfolio construction and dynamic yield farming simple, easy, and intuitive. Until now, DeFi has been confined to a small, select group of early adopters, typically staying within their own ecosystem on a single chain. We are now entering a new era, linked by bridges, bringing multi-chain opportunities, with an explosion in the number of tokens and protocols to choose from. As DeFi continues to rapidly expand, we are starting to see the next wave of users into the space. The first set of institutional players, DAOs seeking to diversify their treasuries, and the first signs of early mass adoption. And what are all these new adopters looking for? Well, they're all really looking for the same thing: smart exposure to the high returns and high yields on offer in the space. But what's the problem? Well, they're entering a high-risk adversarial environment where new protocols rapidly emerge and then disappear by the day, and where interest rates change by the hour. Not only that, but existing solutions were not made with these new entrants in mind, providing complicated and unintuitive UI
outlining investment options that look like alphabet soup. They typically focus on a single aspect of the investment process. Focusing on a single chain. At Optify, we are creating a complete end-to-end decentralized asset management infrastructure solution, automating the entire process, making smart portfolio construction and dynamic multi-chain yield farming simple, easy, and intuitive. For individuals, we're creating a retail-facing platform that abstracts away the complexity of DeFi, allowing users to make informed choices that match their preferences. For institutions, we're creating simple API access that allows them to offer yield directly to their customers by connecting to our protocol, which runs quietly behind the scenes. How does protocol work? Well, we take a deposit and run an algorithm which creates a portfolio. We then go to decentralized exchange and create that portfolio. Once we have that made, we go out and lend all the underlying components out. As interest rates change, we redeem and relend across different protocols and across different chains to make sure the assets are being put to the most productive use. When we rebalance, we perform tax loss harvesting in order to maximize return, and then rerun the algorithm, restarting the entire process. This is entirely automated, operating transparently and autonomously without taking custody of users' assets at any point. We are uniquely positioned, covering the entire asset management process from start to finish, offering smart portfolio construction and dynamic multi-chain yield farming with one protocol. However, it is with our user focus with which we wish to truly differentiate, making everything simple and intuitive, with easy to use and to understand. And why are we the right team to do this? Well, because it's a team of genuine superstars, with not only proven experience in building and scaling blockchain and tech startups, but also the technical ability to tackle this frontier engineering problem. But this problem is only the first step in our much bigger vision. We believe in a tokenized future, a world where all assets are digitized and brought on-chain. We want to build the infrastructure to help power this future, to abstract away the complexity and make smart, multi-asset portfolios available to anyone in the world, no matter your level of wealth, education, or location, and provide it all with one protocol. Thank you.
Thank you. Why do you think this is better than other decentralized asset management protocols? I know you listed Enzyme, there are a few others, but for example, Enzyme, I think they're at like 130 mil TVL. They've kind of just plateaued the last year, right? Why do you think that is?
So why do I think Enzyme's plateaued versus why do we think we're different to them? Yeah. Just a question, I'm actually not 100% sure. I think Enzyme, they require a lot of user choice in the creation of portfolios, and there is a second aspect that you have to trust individuals behind the scenes who are making these investment decisions. So you don't actually know who the person is, you can see a small track record around it. I've gone to Enzyme and it's not a particularly compelling option, you don't actually know what the strategy is around it. What we're creating is entirely algorithmic, you can see exactly what's happened, you can see the backtest around it, you can see how this performed in the past, you can see the rules that make it happen. It's fully transparent and you can see exactly what's happening.
Fair enough. I think, just my 2 cents, is that like decentralized asset management hasn't been quite attractive because the yields aren't attractive relative to some of the more reliable yields in crypto, like staking yields, right, which is kind of like the reference rate. So I haven't seen any of the decentralized asset management protocols outperform in a material way, which is why I think, that's my opinion, as to why Enzyme hasn't delivered in attracting more TVL. So I'd be curious, like, why you think you can outcompete the staking yields, or why you can outcompete some of the Enzyme strategies.
So we're covering both asset management plus yield farming, as I said. So offering both, if you look at yield farming, people are approaching it slightly the wrong way. They're looking at putting a risky asset in and then hoping it goes up and down. When in reality, most of the return actually comes from the price of the underlying asset moving, which means people should start a step earlier with the portfolio construction, which most people aren't looking at. So that's what we do. We start a step earlier, create smart portfolios to maximize the yield you're getting, and then make sure they're dynamically routed out to make sure you maximize the yield on those assets. So rather than leaving them in one venue, we'll redeem and relend to make sure they're actively managed.
You mentioned something about too many user choices for Enzyme. What do you think about user choices? How are you thinking about user choices? What parameters are you putting around that?
Yeah, we'd like to abstract away the choices and form like a robo-advisor. Create simple questions that will get people's goals, people's timelines, their risk preferences, their risk tolerances, and take those and set constraints to run an optimizer, which then allocates people in a portfolio. So rather than having to have knowledge about crypto or finance, you can go say, hey, what's my timeline? What do I want? And then we'll create that for you, and it'll be dynamically routed out across different tokens, and then we'll make sure the asset management is done for you, the yield is done for you, all in one place.
Yeah, so we've definitely seen a decent amount of asset management projects pop up in crypto. And on paper, it seems like something that everyone would want. But kind of speaking to Avi's point about Enzyme, we've seen a little bit of a plateau. And one of the things that we've been going back and forth on is that if you're really, really serious about your asset management, you're probably running a hedge fund or something structured similarly. And then there's kind of another mass of users who don't even know enough that they're gonna go and actually use it. So I guess the question is who do you see as your major user base for the platform?
Yeah. For the initial user base, we're looking at new entrants to the yield farming space. People who are interested in the yields on offer but not really sure how to approach it. So they maybe have staked out an Aave and they're like, shit, there's so many options available. What tokens do I buy? Where do I allocate them out? And we cover that all for them. Thank you.
Going to have our last presentation today, Scriptus.
Hi everyone, I'm Steven. I'm going to be talking about Scriptus. So a little intro on myself. I'm a 5th year PhD student in operations research at Columbia, and I work on mechanism design. So I'm building Scriptus, a marketplace for research as collectible art. We allow researchers to mint their research papers as NFTs so that they can openly share ideas while retaining digital ownership. Collectors can purchase these research NFTs as a way to support the research they care about and to speculate on future impact of different papers. So in short, we're combining a research preprint service and a Web3 marketplace into one platform that specifically focuses on researchers. So to illustrate the key problem that we're solving here, I want to go through the following thought experiment. So we're in year 2022, and humanity has accumulated a small amount of wealth. And there are two possible futures. One is that we do not spend enough on researching climate solutions, and as a result, climate change gets out of control and humanity goes extinct by year 2072. The other option is that we invest a significant amount of money into researching climate solutions, and as a result, we avoid the climate catastrophe, and humanity continues to accumulate wealth for the centuries to come. So, researching climate solutions costs money. And the key question is, wouldn't it be nice if we can spend that future money that we're going to make and spend that money today so that we can do the urgent research that needs to be done now? And that's what we solve. We enable retroactive science funding through tokenized research NFTs. So to see how this works, let's go through another more concrete example. So let's say A is developing a new solar panel. And let's say there's a donor Z who lives in year 2122 who will be willing to give A $1,000 to support her research. But obviously that's not possible to do directly because Z lives in the future. And so the fundamental problem that we run into here is that of a liquidity problem, where the seller of research in this case arrived in the market before the buyer arrived. And let's see how research NFT solves this. So let's say person B comes along in year 2022, discovers A's project, and B is confident that someone in the future will be willing to support A for $1,000. So what B does is B gives $1,000 to A today, and in return gets a research NFT that basically says, I supported A for $1,000. So A can take that money and immediately start doing that research. A year later, C comes along and gives B $1,001, and in return, C gets the research NFT. And after these two transactions, what effectively happened was that C gave $1,000 to A, and B made $1 by facilitating this transaction. And so this process can continue until year 21-22, where after all of these transactions, what effectively happens is Z, who lives in year 21-22, gave $1,000 to A and made this research possible. So that's another way to view Scriptus. We enable decentralized long-term liquidity provision for research funding. And a quick note on the business model, we're going to charge a transaction fee for every transaction that takes place on the platform, and you can do some quick math to show that the market size is significant, and we're live on testnet, and I encourage everyone to check it out. Thank you.
Question for you, and pardon me, I don't know the research space that well, but with the research NFT that they're buying, what are they buying? Where's the economic value in the research? Is there a form of royalty embedded in it? So how does that work?
Right. So as I explained before, right, there's the final buyer who just is willing to give $1,000 to the researcher just to support, right? So who are these final buyers? So the first type of buyer are people who just value research intrinsically, right? Maybe you have a family member who has certain medical conditions, and so you want to support research in that area. So these people just want to support research. The second type are people who basically want to go to their friends and say, hey, look, I supported Alzheimer's research, right? So the psychology here is the same as people who buy luxury items, where the value and the utility does not come from sort of physical utility, but rather from its ability to sort of express your personal identity and your support for science. And then the last type of people, which are the liquidity providers, right? These are just traders who think that they can spot undervalued research ideas and then sell the research NFT later at a higher price.
So as a researcher, I have a question. Why would I use Scriptus instead of like Mirror?
Right, sure. I mean, technically you could use Mirror, but so the way we structure our platform, it feels exactly the same. You might be familiar with Archive. So Mirror, you can't really do that the way you use Archive, but the fundamental difference is relatively small. So you're just publishing your research and have a token that represents what you did, and then people can support you over time.
And then how do you expect to onboard more researchers onto your Scriptus application?
Yeah, so in order to convince researchers to use this platform, you need founders who come from academia. So I am in contact with some pretty high-profile academics who are also involved in the crypto space. So the plan is to have some influencer marketing campaigns where if you have one very high-profile paper to be listed on the platform, then other researchers will be willing to adopt as well.
So around the actual transaction, where someone says, I want to fund this research, do they then go out into like a marketplace and say, I'm willing to preemptively buy this for $1,000 in this example? Or is it someone produces the research and then mint it as an NFT and then sell it up?
Yeah.
And then value accrual kind of comes from like speculation on what you think the value of the research will be in the future.
Yeah, so there are two possibilities. You can write a research proposal and put it on the platform, and so that's a way to get funding sort of before the research is done. You can also put the actual research paper on the platform. And even after the research is done, oftentimes it's not clear what the value of that research is. And so our marketplace actually provides a way for people to speculate, and the value of the NFT actually serves as a signal for how good the research is.
What are the current mechanisms for funding research, and how much is done for financial gain versus wanting to support a researcher?
Yeah, so there are two ways, right? So there's government, NSF, and there's like Google, Facebook research labs. And so I can go into a lot of incentive issues with these funding models. The government funding models are often very noisy because there's only 2 reviewers who decide whether you got $1 million grant. And the industry funding model is very biased towards certain areas of research. Me, for example, I work on card-byte research is supported by industry funding, and I'm working on that because that's where my funding comes from, not because I think the problem is important. And so having this decentralized way to get research funding also incentivizes researchers to work on problems that the general public think is important.
Thank you very much. So, judges, I will be with you.